The first trader on YouTube I found was Al Brooks, and I spent years obsessing over Al Brooks's trading concepts. Today I'm breaking down the 3 secrets I took from Al Brooks that completely changed my P&L forever. If you're new to the channel, my name is Jared King, and I create these videos to help find other like-minded traders like myself, get them into my community, so that we can grow together to new heights. And I'm telling you, what Al Brooks teaches is going to make a real difference in your trading today. Also, to help one of you get started, I'm giving away a free $50,000 account from Tradeify. Stick around to the end of the video and I'll give you the details on how to get your hands on the $50,000 account giveaway. Let's dive into secret number 1. The first secret is the always in direction trend filter. So over time, this has helped me a lot. I'm able to clearly identify where price needs to redeliver. I implement this into my trading. For example, here's a NASDAQ chart. We're looking at the 5-minute chart on NASDAQ. If I was trading on Friday, which was a straight up trend day, I would be always in long, meaning I'm only going to look for long positions. And if I am long, I want to stay long and scale in and out of my position, but always staying in long. So I could use it a different way that some people have heard. So I use it as a scalping technique. Let me show you what I'm talking about. Right here we have a balance area. This is an area of price that I would look for to retrace back into this area here. Here we have a nice continuation play. Right there, it touches in and gives me an entry point. If I enter in there, for example, I'm then going to scale out as price breaks above the high. I'm going to take one contract off. I'm not going to look to exit because I would have like measured move target up here, looking for price to come up here. But stay always in long. And then I would look to repeat this same entry pattern again right here. We have another balance area here. I would then look just to rinse and repeat the same process, but always staying in long, which is something I developed due to having to deal with trailing drawdown and prop firm accounts. It really helps to deal with trailing drawdown and stuff like that. Especially when you have price in a trend like this, I would then be scaling out and then again, rinse and repeating. And as long as price hadn't reached my target yet, price continued higher, I'd continue to scale out and in while the market keeps trending in an always in market environment. Now, a lot of traders have an issue with getting in and out of the market and flip-flopping their biases back and forth. And I think this always in perspective way of looking at the market will really help them, which comes into the next thing that we're going to talk about, because secret number 2 is a different way of looking at the market than I've ever seen anybody look at. And it's exactly what I learned from Al Brooks. Secret 2 is the two-sided dynamic trade management. For every tick you buy, an institution is selling. That means they have a valid position. Because institutions are consistently profitable, both sides have a valid mathematical case 95% of the time. Obviously, there is a 5% of the time when the market is just ripping, but most of the time, the market, both buyers and sellers can make money within the market if they have a dynamic trade management style. Even in this trend right here from Friday, was still an opportunity for both sides of the market to make plenty of money. Let me drop down to a lower time frame and I'll show you what I mean. So even though price was in a vicious uptrend here, if you were to sell at all-time new highs up here, you could essentially still profit if you played this the right way, because there's micro trends within here. These are big pullbacks here. We saw one contract. We could then still profit from this move down. You got 3. That's pretty decent profit right there for a move, right? It's not too bad. We'll exit here. We'll go ahead and buy. If it goes against us, we'll buy more. And then it goes our way. We could sell. And you can see how both sides of the market can make money in most situations. Thinking in the terms of this will drastically change the way you look at the market, understanding that both sides of the market can make money. Whether you go long or short, you can still make money. There's still a viable edge in the market almost at all times. Something that Al Brooks also taught me is in trading ranges. This isn't secret number 3, it's just more of a bonus low time frame example. That if price is in a trading range, like it is now in a trading range here, you can buy at the low, sell at the high, because trading ranges continue 80% of the time. So you can see here that you can make a lot of money trading both sides of the market. It's another example of everyone can win in most situations, and it's what I like to think about, especially when I'm trading the opening. Here we have a gap down, and I like to start thinking, who's able to make money in this market? Are both sides of the market able to make money? Are the bears only able to make money? And then if I see that one side of the market is unable to make money, then they have to get out, right? So I look for trap traders this way. Are sellers getting pullbacks that are going to induce more selling? Are buyers getting breakouts that are going to induce more buying? Are the bears getting what they want? Or are they not? And this is something I learned from Al Brooks, because the market is more likely to go into like breakout mode when the bears are having a hard time making money. Here it had opportunity, but then here you have a 1, 2, 3, 4, 5 candle breakout to the upside. Very small pullback that doesn't get back to the last bear bar. If a bear sold up here, he's going to be very quickly to take profits, expecting another rip up like this. And he's afraid that the market won't come back to where he shorted if it goes up. So that's why you see such a savage breakout here. It's a different way of looking at the market that I think is lost on a lot of traders these days. Now, here is secret number 3, by far the most powerful one. This is the information tax. Paying for information, the risk to reward trade-off. This really opened my eyes and helped me really understand risk to reward in a different light. Best way to explain this is in the market, but I'll try to explain to you right here. Right here at this point, probability is 40 to 50% the trade will work out. When the outcome is unclear, your risk is a lot lower. And then if you have a high confidence trade, you have more information, it's going to require a much larger risk. This drastically changed how I implemented stop losses in my trading, and I think it will in yours too. We are on NASDAQ 5-minute chart. Let's say I believe that price was going to come up to this high up here. In any situation where I enter, my stop needs to go down here. Price comes down lower here, right in here. If I enter in here, my risk is about 30 points and my target is about 90 points away. It's a 2.96 risk to reward ratio. My stop, it has to go down here because it's the highest odds of it staying intact. Now, let's say I wait for price to get above this high. It's much more likely to get to that high, right? Prices broke that high. Price is much more likely to go up there. The probability of it jumps a lot. Down here, earlier in the trend, looked really bearish. Likelihood of it breaking above this high all the way up here, 100 points higher, is very low. 40, 50% likelihood of it making it all the way up there and being a successful trade. But if I was to enter in now, my stop still needs to go where it needs to go, regardless of where I enter. This is huge. When I learned this, it changed the whole direction of my trading. It was like a massive game changer. Now, I am risking 65 points, and I'm only gaining 58. It's a 0.89 risk to reward ratio, but the chances of it reaching here is much higher. Al Brooks likes to say that the max odds of a position working out is 60%. That's like highest. Odds of success went up 20 to 30%, but now you have to risk a lot more. There's always this balance between your information. That's why I called it the information tax, and your target in the reward, right? The more information you have, the more risk, but the more likelihood it's going to play out. There's a balance here. There's a give and take between the risk and the reward, and the information and the risk. Your stop needs to go where it needs to go. If I had tried to cheat at any point in here, I would have got stopped out. It would have been a 100% loss. I would have lost all the money. But because I put my stop where it needs to go and didn't try to cheat the system here, it's going to end up being a winning trade, I would imagine. It's a very good winning trade. But I didn't get that 2.8 risk to reward ratio. I only got 1.3 times my risk. What I got from this when I learned it from Al Brooks was my stop needs to go where it needs to go, regardless of my entry price. We do not set stop losses based on dollar amounts or points. We adjust our risk via position sizing, and we don't try to cheat, because cheating doesn't work with NASDAQ. NASDAQ is a wild asset, and so are many others. Gold, silver, ES2. Your stop needs to go, and then you would adjust your position sizing and scale down. Use micros and minis, because micros allow you to go in with 2, 3, 4, 5, 6, 7, 8, 9, 10 contracts. And that way you can scale down and put your stop where it needs to go, because you're late to the trade. If you enter down here, your likelihood of success is greatly decreased, but you have a lot less risk involved in the trade. The higher the odds of the trade, the more risk that is going to be involved in the trade, because you have more information. And this is how the market works. It's always this balancing act between reward and risk, and probability and risk, right? Higher probability equals more risk. And this is a magical thing. It absolutely transformed the way I traded. It's why I started implementing scaling out. Now, the giveaway. To get in the giveaway, all you have to do is, number 1, like the video. Number 2, subscribe to my channel. And then number 3, comment your favorite concept from this video. Make sure that you put my favorite Al Brooks concept and then put it in. Make sure you say that exact sentence. It will help me identify who actually participated in the giveaway. And then as of May 10th up to the 13th, I'm also doing another $100,000 giveaway on my Twitter. The link is in the description. And then I also have another YouTube channel that is 100% focused on prop firms, specifically futures trading prop firms. And I also have another $100,000 giveaway on that channel as well. And you can participate in all 3 of these at one time. So I would definitely check out my Discord if you want to be part of my community, where I give out more accounts. I trade live every single day, and every Tuesday I go live for everybody and I trade live, teach live. I do it all in front of you. And then I have a website specifically for discounts with prop firms. So I went and verified prop firms that I actually trust, and I guarantee that they pay you out. If they won't pay you out, I will. This is verifiedfundingcompanies.com. Now, I've learned a lot more from Al Brooks over my time, but I thought that these 3 were the best starting points. I probably will make a part 2 to this video and go into some other things. You can find the links to everything I've talked about in this video. If you're interested in learning my most profitable trading strategy, in the right hand corner, check out this video now.